Welcome back everyone to another video, and in today's video we're going to be doing the episode 2 to our backtesting the ICT silver bullet model, specifically the AM session for the Japanese yen dollar. If you guys want me to do other currencies, just be sure to hit the like below and also comment down below which currency you want me to do. And in the previous video we finished on Friday, August 9th, so jumping right into this, we're going to continue tape reading and getting to Monday's price action. Jumping into this analysis, so here we have Monday, August 12th. We just took out some sell stops here. Price took out buy stops above here. Then we come down, taking out sell stops down here. We're below that midnight open. Here's that ICT silver bullet session. If I were to engage in this, let's see if we have any levels. And from the looks of it here, the only thing I would say is we have this small fair value gap here on the 15-minute. So we have this 15-minute fair value gap here. We also have a potential low resistance liquidity run because the real last swing high was here. We also have this one up here, but it's just really too far, but it explains why price was really explosive, especially during the session as well. Jumping down to the 1 minute to see how we would have possibly framed a setup on this day. From the looks of it here, it was a little choppy, going into it. It wasn't as clean as we, usually like. I like how we completely displaced upward, taking out all these bearish PD arrays. Because remember, we like to see it violate those bearish PD arrays, which is really important. And I'm going to mark the 10 a.m. opening price, which is going to be right here. Now, one thing I do like is how we were below the 10 a.m. opening price before going any higher. Because like I always say, if you can get a double discount or a double premium, that just gives you extra confidence in your trade, especially in the direction that you're looking towards. Some obvious draws I would have is these equal highs up here. These are triple equal highs. So there's going to be buy stops residing above here. And these really clean buy stops, retail is trying to sell, 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 which is, again, what is the market makers going to do? They're going to buy those sell orders, taking out all these buy stops that are going to be above here, here, and the last target, which would be all the way up here. Zooming in here, as we can see, we actually do have a bullish breaker. Low, high, lower low, higher high. And this whole thing is going to be your bullish breaker. And in addition, we also have a fair value gap inside the breaker. So remember, I always talk about how if you have multiple PD arrays working together, rather than just one, you have a higher confluence as to the direction that you're looking towards. So we have the 15-minute fair value gap, right, that we marked out. We then have the fair value gap right here as well. And then on top of that, we also have a bullish breaker. So you have multiple things working together, which will allow you to have more confidence for the direction that you're intending price to reach. We then also have a bullish order block as this down close candle here was engulfed by these two up close candles. So once again, we just draw that out, and I'm going to make sure it shows up only on the 1 minute here. And some minor draws for price would probably be these equal highs up here. This is really, really clean. I'm going to note that down so we could have that marked as well. And again, price, once again, it gives you more confluence going in for the day. You have an order block coupled with a volume imbalance, as we can see right here. And look how price respects that. It does sort of go through it just somewhat. But again, we still respect that. Look at the wicks respecting the order block as well. So we're going to also mark that in addition to the order block that we had. And I'm going to mark out some other targets as well. We have these equal highs up here as a possible first partial. I would probably take first partials maybe here or here, but this could maybe be like a second possible target for your partials. And then we also have these equal highs up here as well. So you have three main areas in which you can get out on price. You have the first partial, second partial, third and final partial up here. You could even hold maybe one contract to start to see if you can get above that midnight opening price. But I'd probably be safer trying to get out up here with these equal highs. And continuing the analysis for this trade setup, we also have this fair value gap, but it's being treated as a breakaway gap because we don't trade into the consequent encroachment of it. And then we also have another fair value gap as well, in the form of a BISI breakaway gap as well, because we don't trade back into the 50%. You could also treat this like a mitigation block because, again, as we can see here, this whole wick, we just traded up into the high. We didn't pull back. We didn't do any kind of rejection. We just traded right through it, came back. We didn't even get into the 50% of it. So you couple that with this large BISI that we're treating it as a breakaway gap as well. And then we see price being sent higher, finally reaching that final terminus target for an all in all pretty well good trade. The only thing I didn't, like I said, I did like that we were taking liquidity ahead of the session. That's really important that we're taking liquidity in the opposite direction. And we were also below that 10 a.m. opening price, which is also very important. But all in all, very, very decent Monday. As usually Mondays may not be the best, but in this case, this Monday was rather volatile. And we were also below that midnight opening price as well. All right, so let's continue tape reading to see what did we get for Tuesday's price action, as Monday's was pretty good. So with Tuesday, we can go in with really high expectations. And as expected, as we can see, we sort of get a lot of chop around here. Price took this buy side liquidity. Ideally, I'd want to see us draw down a little further, but it's fine. It looks like we sort of chopped around here. But again, we had such a large movement Monday that Tuesday was going to be expected to probably consolidate. But jumping into the 1 minute here just to see if there was really anything, and from the looks of it here, we get a lot of chop. So this is definitely going to be a skip day. So as we can see here, if I draw out this, you can see price just simply chop around this whole consolidation block. There's no real direction as to where price wants to go. And in addition here, if we mark out the 10 a.m. opening price, it's going to be right here. You can see how price just chops around it, chops around it. We can't really get away from it. You want to see price trending on days. So really, all in all, this is just going to be a skippable day. It was expected, like I said, because of Monday. So we're going to hop over to Wednesday to see what we got. So here we have Wednesday's price action, and it looks to be rather volatile day. We sort of come down, come up, creating like a BPR here, single pass down, single pass up. From the looks of it as well, we trade up into here and then we do a sell off. So it's going to be interesting to see how and why price reacted the way it did. But on the 15-minute, the only level I would have is this premium 15-minute fair value gap, this SIBI. That's really the only other level I would have. And then possibly maybe as a potential target to go short here, the consequent encroachment of this fair value gap. So we have the SIBI, we're above that midnight opening price, and we also have the consequent encroachment of this fair value gap as well. And we're going to mark out the 10 a.m. opening price, which is going to be right here. Jumping into the 1 minute to see how we would have possibly framed the setup going in for the day. Right away from what I'm seeing here is we have a bearish breaker. But before I get to that, I want you guys to also notice that we have a market maker sell model because you have consolidation, consolidation, consolidation on the way upward. And we're taking buy stops, buy stops, buy stops. Really, it's important to note that especially when price is just taking buy stop in one direction, even during that session, you can probably expect to get something as well. Now, looking at this actually a little further here, we actually wouldn't been able to have an entry here at all just because this sell happened rather late. It happened outside of our 11 a.m. window. And that's really the benefit of utilizing ICT's silver bullet entry model is that you know that if you entered here, it's outside and then look what happens. So there's a consequence to not, keeping your rules strict and following within that 10 to 11 a.m. session. Ideally, I'd want to see this price action a little bit more before because remember the macro started here. So we needed to see something here, some kind of setup for us to enter. And unfortunately here's that 11 a.m. close. So there's really nothing here for us to really enter on. But price did go down. We're in a deep premium because we're above 10 a.m. opening price and midnight opening price. And we interacted with that 15-minute SIBI that we marked out as well. And I also talked about this being a potential bearish breaker as we have a high, low, higher high, lower low, and price trades up into both the bearish breaker here and the SIBI of the consequent encroachment of it. But again, unfortunately, it happened outside of our time window, which is fine. Simply, we're just going to skip this day and we'll head over to Thursday to see what we got. Alrighty, so here we are on Thursday, and from the looks of it here, we took a lot of sell stops all throughout here as well. But we have this massive displacement candle. This might have been like an NFP day or some kind of CPI, something like a major news at 8:30. And looks like we had some lackluster PA. And really on these days, you have to be very careful as especially you have such a large displacement. So you might be getting like a consolidation for the ICT silver bullet in that AM session. And I'm going to be showing you guys this 1 minute so you can see how really on these type of days, it's just best to, go to a different asset class. You might want to go to NASDAQ, for example, or just simply just leave the market out and not really trade during these days because where would your entry be in any of this price action? It's really nowhere. You have a fair value gap again outside of it, but price punishes you. So it's really being able to be strict with your rules and following those guidelines so that you don't make mistakes that are really rookie mistakes. And really all this is just all chop. It's just consolidation throughout this entire session. There's no real clear direction as to where price wants to go. And we were also above 10 a.m. opening price here. Then we came back down. So really this is just a skippable day. And then we'll head over to Friday to see what we got. So here we have Friday's price action. I like how we're building in a really deep premium above that midnight opening price. And I like how we're creating a low resistance liquidity run environment for price as well. Now, one thing I didn't like about this 10 to 11 a.m. session is how we displaced rather dramatically here. Ideally, I'd want to see maybe just a slight pause and then we go lower, or even during that 1050 macro. But from the looks of it here, we just sell off rather aggressively. And let me show you guys the 1 minute so you can see how really on these days, again, just be patient and skip them because there's going to be better days. Look at this. So we come down. We're well below already that 10 a.m. opening price, which isn't good. If you're a seller, ideally you'd want to be above the 10 a.m. opening price, but it's fine as you're still above the midnight opening price. Now, look how lackluster the price action is. So we displaced lower. We do have a fair value gap in here. Now, I didn't like how we violated this lower bearish PD array, but we did respect this one above. Order block tab, we come lower. But look at how lackluster the PA is. So we come back up during that 1030 right to the macro, and then we head lower. So, and then it begins to just consolidate, and then we head up higher, back up into this premium SIBI up here. So you want to see really on the top end of price action, you want to see that happen during that 10 to 11 a.m. session. You don't really want to see price start heading down so dramatically right away, right when that 10 a.m. opening hits, as this will lead to low probability setups and lackluster PA, which we can see here with price just simply consolidating out. And even if you did enter here, you'd be stopped out rather quickly. And let's head over to Monday to see what kind of price action we got. So here we have Monday's price action for Monday, August 19th. And from the looks of it here, we're getting a little bit of a choppy situation here. But again, I remember from last time, we don't want to judge a book by its cover, as this is the 15-minute time frame. So really, if I had any levels marked, I do like how we went below the 10 a.m. opening price right when 10 a.m. started, and we're also below that midnight opening price. Something else to note is how we tapped into this fair value gap here, this BISI. Now, my target for the day would have been these highs up here, ideally. This would have been my main draw for price. I'm going to mark this as hourly buy side. I was looking at this being a potential draw. You know, we took out sell stops right here. We're below that midnight opening price and below the 10 a.m. opening price. Price taps into a 15-minute fair value gap, and then we could take out these buy stops here. But from the looks of it here, we stopped rather short. Now, if I was looking for a potential take profit on this day, possibly the consequent encroachment of this rejection candle here. In addition, we also have this inverted fair value gap. If you guys draw that out, look at how the bodies are respecting that inverted fair value gap. That's what you want to see, especially when if you're looking for a potential target. And even if anyone was trying to sell within this macro as well, look at how price is respecting that PA there. So here we're on the 1 minute, and as we can see, there's that 10 a.m. opening price. Price goes up, comes down in the form of a Judas swing as we take buy stops and sell stops. So I'm going to mark out this sell stop, as remember, the narrative that we're building is that we want to see price head up higher because we're below that minute opening price, low resistance liquidity run environment as well, as there isn't any swing highs or lows within all this price action. Something else to note on your chart would also be that price in the close of the macro, because remember the 950 to 1010 macro just finished right here. And then as we can see here, price simply explodes upward, filling all this low resistance liquidity environment. Now, we don't have really any kind of bullish breaker to enter in or any kind of fair value gap. The only thing I would say is that we potentially have a mitigation block here. So I'm going to mark this out. We also have a bullish order block here as well. Now, ideally, I always talk about how you want to see bullish order blocks act really as supporting your price after you're entering the trade. So for example, let's say here or even here, reaching your target rather than a point of entry. But in this case, if you treat this as a potential mitigation block, we see price trade up into this coupled with the order block, and then we trade higher. Something else to note is remember, you're also below 10 a.m. opening price, so you're in a deep discount as well. But if we were looking for a potential entry to go long in this price action with a fair value gap, it could be this small fair value gap right in here. And again, you might be saying, why would I want to enter, for example, there? Well, remember, you're still below 10 a.m. opening price and midnight opening price. But in addition, you also have a bullish order block. Now, I always talk about how once price moves, like for example, this displacement here, this is like a train. Once you have such a large movement and we have some sort of fair value gap here, if you have two PD arrays at once, which in this case, these two down close candles were engulfed by these three up close candles, you draw it out and you now have two bullish PD arrays working in your favor, with your stop loss being maybe possibly below this volume imbalance here or just below this candle here, as you don't want to see price trade back up into these bullish PD arrays. We then see price trade up, We also have another bullish order block as well. And again, like I said, you want to see this really act more as supporting price action, not really as points of entry. In this case, we coupled the fair value gap here with the order block. So it's a little different compared to just entering here, for example, right at the order block. We then have a volume imbalance here. We see price respect that as well. And remember, wicks are gaps. And in this case here, we treat this wick as a fair value gap. We also have this fair value gap in here, which we respect it and we treat it as a breakaway gap. So I'd rather just mark this fair value gap here with the wick. And then we see price trade up higher into the inverted fair value gap that we marked on the 15-minute. And remember, this is the consequent encroachment that we marked here of the wick. So potential exits could be the 50% of there. Maybe you could take a partial possibly here, here, or maybe potentially like a second partial here, and then your final target here. Again, the main draw was we were looking for these equal highs all the way up here to take out buy stops, but already as we can see here, you see how price isn't moving with a lot of force on this day, and it is a Monday, keep in mind. So already nearing that 11 a.m., I'll probably put your stop loss maybe here, stopped out, and you're done for the day. But again, it was there, and we also had supporting bullish PD array seeing price head higher as well. Now let's head over to Tuesday to see what kind of price action we got. So here we have Tuesday, and the only thing I'm looking to be is a seller, as we've really built in a deep premium. At the point of the ICT silver bullet model, we're practically almost about 0.7% above the minute open, which is quite a bit, and I don't want to be a buyer in any of this, and following the rules, we can only be a seller. But from the looks of this price action here, we had an obvious draw. Remember, this is the one that we were looking for the previous day. Looks like price wants to hunt that as an obvious draw, as there's going to be buy stops above these highs. But this is going to be a skippable day. We'll head over to Wednesday and see what kind of price action we got. So here we have Wednesday's price action. Looks like 10, there must have been some kind of major news. We take out sell stops here and here. And from the looks of it here, we see price have equal highs here as being the main draw for the day. So I'm going to mark that out to see if possibly we could have framed a buy setup going into any of this price action. In addition, we also have a 15-minute bullish breaker as you have a low, high, lower low, higher high. So this whole thing is going to be your bullish breaker. Something else to note is that we have a potential draw right up here, which we see price sort of chop through it, but again, we eventually make our way up higher. Dropping down to the 1-minute chart to see how we would have potentially framed a setup going into this day. Now, something important to note is that, again, this is a little bit choppy here. It looks like there must have been some kind of massive news event. Now, I'm going to show you guys how really this kind of day was also a little bit choppy. Not the cleanest price action. Now, even though we have these levels here on the 15-minute and it looks a little cleaner, on the 1-minute, this is going to be a little choppy, and I'm going to show you guys now. So here we are on the 1-minute here, and as we can see, there's a lot of chop. Now, like I always say, I don't like to see price chop around that 10 a.m. opening price, as this is indicating to me that this is just a consolidation. Now, I do like how we went higher, but price completely disrespects this bullish PD array by closing below the high of this candle here. We do respect the bullish order block, but this is not what you want to see if you're looking to be bullish. And once again here, we have this fair value gap, and you see price completely chop through it. And we consolidate throughout all this price action here till eventually, right before the macro, we go higher. So again, this is just really not favorable price action. You don't want to be engaging in any of this kind of slop. But it was to be expected as we had a really high impact news driver going in for 10 a.m. Ideally, you want to see that happen before the session, not right at the session. So we'll skip this session and head over to Thursday's price action. So here we are on Thursday's price action, and as we can see here, we sort of get a little bit of a chop, a consolidation. The only thing I'm looking to be is a buyer, as we are below the minute opening price, and we're coming off this large rejection candle the previous day. Now, ICT talks about how you can utilize these wicks as potential gaps as well, but utilizing the Fibonacci tool. So if you draw that out from the open to the low, and we mark out the Fibonacci ranges, for example, the 618, as we can see here on price action, look how price respects both the 50% and the 618. Now, you're not going to be only using this. This is simply just something that you can utilize to help build a narrative or a framework going into the day, in particular to the direction that you're trying to trade in. But in particular to this day, the only thing I can see so far as potential targets for this 15-minute is that I do like this bearish order block here. So let's mark that out. Now, the reason why this is a bearish order block is because this up close candle here was engulfed by these two down close candles. And we see price trade right into it. Look at the bodies respecting that. And then we trade lower. Now, heading over to the 1-minute here, let's see if we could have possibly framed the setup going into this day. And from the looks of it here, it looks like we don't have really any kind of clean price action to engage in. Now, I see a lot of small candles here. Ideally, I wanted to see this kind of price action here, not later. And there's no real fair value gap to enter in. There's no breaker. There's nothing for me to really go in obvious and say, okay, that's my point of entry. Now, you could say possibly this could have been a mitigation block. We see price trade back up into it. We did take sell stops, and I like this really clean equal high draw as well. But again, me personally, I don't really see any kind of clean price action. It's rather tight, and there's nothing really clean as to where my point of entry could be. Again, you could also say, like I said before, this being a potential mitigation block where you enter right here. This is that 10:30 a.m. session here. We see price trade up back into the 10 a.m. opening price. So yeah, unfortunately, this day I wouldn't have taken it as there's nothing clean. We see price chop here, closing in from the London close right after that 11 a.m. session close. And then we see price trade higher. Again, there's nothing really for me to enter on. Ideally, like I said, I wanted to see this kind of price action happen down here. So we see price displace upward, fair value gap like this, and then we trade higher. But again, all we seem to have had was just a mitigation block, possibly, and that's rather it. So me personally, this is a skippable day, and we'll head over the last day, which will be Friday. So here we have Friday's price action, and again, we don't like to see 10 a.m. being the news driver for the day. Ideally, we wanted to see it happen before, possibly at 8:30, 9:45, for example. But again, it happened there, so this is going to be an obvious skip day. And the obvious draw would be these equal highs up here, as again, retail is trying to sell these equal highs. There's going to be buy stops residing above those highs, and we see price right at 10. We completely take out all these buy stops here. But in addition, price also takes sell stops going in lower. So price is efficiently being delivered as we're taking sell stops going below. And then we finally reach this main target, which is those buy stops up there. Going into the 1 minute here to get a bigger perspective. Again, there's just simply no point of entry here. We just simply explode upward. And there's nowhere to really sort of engage in, no fair value gap. Because like I said before, ideally you want to see this happen before. And something else to note here is look at another potential draw. Look at these equal highs that are really clean here. Price simply goes lower, takes in that deep discount, and we completely take out buy stops here. But we also take the larger buy stop, which is the 15-minute buy stops that we had marked here. So those were the 2 weeks that we did for the back testing, and we finished on Friday, August 23rd. And once again, if you guys are enjoying this series, please drop a like, comment down below, and also subscribe. If you guys also want me to drop the notes for this, I'll definitely do that. Make it like a PDF format if you guys want. Now, if you guys also want me to engage with the Euro and GBP or any kind of other currency, I can backtest them as well from that 10 to 11 a.m. ICT Silver Bullet model. So I hope you guys found episode 2 really insightful. I really appreciate your guys' time watching these videos, and I'm almost up to 100 subscribers. So again, I really appreciate you guys. So I'll catch you guys in the next video. Peace.